Hey everybody, I'm Anita Sharma. Welcome to Market Call on BNN Bloomberg. You just saw Andy Bell, and you'll see him later today right here on our network. Kim Bolton is to my stage left, as we say in showbiz. He's the president and portfolio manager of Black Swan Dexteritas, taking your calls, emails, and tweets on tech. Our number toll free, 1-855-326-6266. Our email address, bnnbloomberg.ca. What's going on with these markets? Kim, are you excited? A lot of y'all were waiting for this jobs data to come through. It looks like it's well done as far as the jobs go. In the States, absolutely.
Not so good
Let's start there. Let's start with the U.S. Because we're seeing the markets move higher on this news.
Yep. The expectations were around 160, 170,000. It was 266.
Got it.
Revisions.
187 was the estimate.
Yeah. And then off to the races, a bit of a pause sort of after the news came out, but good liquidity on the day.
Yeah.
And we're off to the races. Although, think about it, it's been quite a round trip this week. You had the S&P go all the way down to what was it, 3085, and we're back up to almost 3150. That's like a 2% round turn that you did in a matter of 4.5 days.
Yeah, December is a choppy month, right? Last year, a lot of your colleagues will say that was an anomaly, what we saw with respect to Scrooge coming out in full force. We had a few technical analysts on these last few days, and they said, Anita, the first 2 weeks of December, this is par for the course of volatility that we're seeing. But I want you to look in your crystal ball, and then we'll get to Canadian jobs in a second. Yeah. And I want to also look at the Canadian dollar in about a minute. But for now, give us an idea of how you think the rest of this month is going to play out. Do you see Santa Claus coming to the table, coming down the chimney?
Yeah, later in the month, absolutely, absolutely. However, between now and then, there's a lot of time and a lot of space in the market, a lot of black swan catalysts out there.
Right.
Especially next weekend, you have the potential of the tariffs, right, coming out. And I think certainly the news today, the economic news down in the U.S. will probably embolden Trump to try to push as far as he can get.
Yeah. Okay. Let's talk about the Canadian jobs data now, and maybe we can take a look at the loonie. Thank you, Stace, our director in charge. Under pressure today, off about more than 0.5% for the year. The loonie not doing anything. Canada posting its largest job loss since 2009. Full-time jobs really seeing the big losses there. This isn't what we want to see, Kim.
It's interesting because they just had the Bank of Canada rate announcement on Wednesday. It was only a day and a half ago. 2 days ago, and they're, when asked about having an insurance cut, they said really there was no chance of it. The Canadian dollar took off, but now we're sort of back, just like the market. We're sort of did a round turn on the week. I don't think it's going to really direct to a particular trend for the Canadian dollar. It's still, you can see it's still stuck in this range between sort of 76 and 75.
Right.
So, you know, it's good for those that have the U.S. dollar exposure out there.
Yeah.
But it just creates a lot of volatility in the market.
We have a switch out on the central bank front. We know Lagarde taking over for Draghi across the pond. On this side of the border, in this particular country, Stephen Polaz now says he will be stepping down. The race is on to find who the successor will be. I'm not going to put you on the spot, but does this lend to any possible volatility? Probably not, right? Is it business as usual as far as the Bank of Canada is concerned?
Yeah, you know, the Bank of Canada has a very, very strong bench behind Polaz, so I think it'll be very seamless. It is interesting, Anita, when you talk about the central banks, because you've really had, since the middle of October, another massive amount of liquidity.
100%.
You know, as a portfolio manager, you always look at the fundamentals, you look at the technicals, but the capital flows have been the dominant factor in the market.
Yeah.
And then you had, you know, as Powell would say, it was just an adjustment on the repos, but it, you know, if it looks like a duck and quacks like a duck, it's quantitative easing. That's what he's doing.
All right, so QE, pumping the market, juicing the market, call it what you will. You think there's some opportunities still to be had. NASDAQ, very strong year to date as we close out this year. But on the tech stock front, give us an idea. I understand you've mapped out 5 spaces that we all need to keep an eye on moving into 2020.
Yep. You know, the tech arena is just massive now, not just on the vendors, but also on the end users. There's a lot of companies out there that are really true technology companies as end users.
Look at that NASDAQ, 30%.
Yeah, it's so there are some very, very lucrative and long runways that we have focused on going into 2020. And I'll just sort of talk very briefly about it. You know, it's the whole digitalization, electrification that leads into the autonomous driving.
Yeah.
When I talk about these 5 sort of trends and themes in technology, it gives me goosebumps because everything is converging and it's going to completely change our world, but it's going to give fantastic investment opportunities. So the whole autonomous driving. The 5G deployment is going to change our lives, not just as individuals, but in the manufacturing, the Internet of Things side. The whole gaming side is just growing in leaps and bounds, and that is going to be changing it.
Big data?
Big data, and there's fantastic opportunities on the hardware side, on the telco, the communication, but then on the processing and the data analytics and the artificial intelligence. You know, if I think back a year ago, artificial intelligence was very much a buzzword, but it's actually being used. Used, for example, another trend that we see is in digital twins, where you actually take machinery on a factory floor and you can actually produce it into an avatar, put it on a screen, you can fiddle with it, make it more efficient, more effective in what that machine does, and it spits out cash at the bottom for the companies.
All
so
right.
There's fantastic opportunity.
We love it when anything spits out cash.
Yeah.
And your returns look pretty good, your past picks, so we'll get to those later in the show. But right now, we're taking a break. We're coming back with Kim Bolton. He's the president and portfolio manager at Black Swan Dexteritas. We are on tech today. Give us a call, 1-855-326-6266. Your calls are straight ahead. Welcome back to Market Call on BNN Bloomberg. We are with Kim Bolton today. Let's start with an email. Kim is from Rod. Esports recommendation. Do you have any suggestions for companies that are involved in esports?
Absolutely. You know, it's interesting in the whole esports space. There's so many different opportunities, and the ecosystem of esports is expanding from the publishers to the distributors, to the software and the hardware side. But one we picked up recently is Take-Two Interactive Software. It's TTWO on the NASDAQ.
Okay.
We're very bullish following the Q2 2020 results that came out, and it saw really, really strong, solid opportunities in their new Borderlands 3. You know, Take-Two, there's really the 3. There's the Electronic Arts, Take-Two, but Take-Two has a very, very strong track record of IP creation and its sustainability of that. It doesn't actually spread a lot of games onto the market, but the ones that it brings on are very, very successful. Lastly, for Take-Two, they're a little bit behind some of the others when it comes to the digitalization, but they're catching up, which is actually going to be very margin accretive as they get their games more digitalized.
Okay, Kim.
And more mobile.
Thank you, sir.
Okay.
Let's get to the phones now. Are you ready?
Yep.
All right, let's do it. Let's bring in Alex from Montreal. Hi, Alex.
I'd like to ask you about Texas Instruments. Do you think it has much upside? Thank you.
Thank you very much, Alex. Texas Instruments, it is in our top 10. Had a difficult time because they did a bit of a warning in the most recent earnings. However, it's in the right place when it comes to particularly on the analog side that services the autonomous driving side, but it's also involved in the 5G deployment. And this is actually, I believe, to be a pretty good opportunity to buy back in. We have a 12-month target on this of 157, and currently, right now, sitting at about 122. And it's
so you're way more bullish than consensus, coming in at 124.
Yep.
It's funny because in this space, Texas Instruments certainly does not steal the headlines, but if you look at that chart for 2019, I'm sure we'd see this across the board with many stocks. It really has been quietly just solidly moving higher.
Well, and they had that earnings disappointment back in...
Yeah, you saw that hiccup there.
Back in October, which really gave you a great opportunity, which was a bit of an analogy compared to some of the other chip players out there in the semiconductor space. But they are considered a bit of a barometer for that side. But if you look back, they have been very, very conservative in their outlooks going forward. So we believe this is a good opportunity. All
right, great, Kim. Thank you. Another phone call, John in Barrie, Ontario. Hi, John.
Hello. The guest's opinion on BlackBerry, and to what extent is it suffering from tax loss selling? Thank you.
You're welcome.
That's a good question, John. Obviously, there will be tax loss selling. And I never approach BlackBerry as an investment. I approach it more as a trading vehicle.
Yeah.
And so right now, sitting right around 7, if it gets down under 7, we'd actually look to pick it up and probably lose it, $7.50 to $8.
Okay. This is a tight trade.
Yeah, and it has such strong competition out there, and it's been disappointing. For example, when they bought that Silence.
Yeah.
And that was supposed to be very accretive, but it just hasn't happened, and it's disappointed the analysts, and so it's more of a trading vehicle rather than an investment.
Okay, Kim. Let's get to another email now. Sammy in Vancouver, curious about Roku. He would like your outlook, considering, he says, competition from Disney and other streamers. Do you think it would be acquired by one of them?
Well, they'd have to pay a hefty price.
Yeah.
Because we follow Roku. We don't own it right now, but we very much like it. So just for your guests, Roku it sells video streaming hardware,
right?
And they sell that to the TV makers, and it facilitates the whole streaming side of things. If you look at the volatility of the market this week, and then you put Roku stock beside it, it's been amazing because on Monday it plunged 15%. That was when Morgan Stanley came out and actually downgraded it to underweight. But then Needham came out, I think it was on Tuesday, and they reaffirmed their buy rating on it, and so it popped up another 8%.
There's the 1 week, you see the volatility.
Tremendous volatility that they have in it. But then if you look at it from the beginning of the year, it's up 345% since the beginning. So is someone going to actually buy it?
Wow, look at that.
I don't think so, because it would be quite a hefty price tag.
So what is this? If you have it, just lock it, look the other way, and move on with the rest of your life? Is this the opposite of a BlackBerry in terms of not a trade, or do you trade the dips? Do you get in when you see a dip like that?
Well, I always approach this. We have a third of a position in Roku.
Yeah.
Now I always do it a third, a third, a third.
Okay.
And so you buy a third here, look to buy another third down in sort of low 130s, and then maybe another third down in the 118 to 120 type site. Our price target on Roku is 170, 12-month price target. So it does have some decent upside.
Okay.
But I always do it about a third, a third, a third, because if you buy it and it goes up, you can say, hey, that was very smart of me.
You got a piece of it, yeah.
And if it goes down, you say, perfect, because it's sort of falling into the plan.
Right.
Yeah.
You can stock up even
sort of
more.
leg into it, yeah.
Exactly. All right, Kim, fantastic. Thank you, sir. Let's come back with Kim Bolton and more of your phone calls, 1-855-326-6266. Welcome back. We are with Kim Bolton on Market Call. Let's get to another email. Kim, Alan, curious about Datadog. What's up with Datadog? He wants to know.
Thanks, Alan. I think I recommended this one in I don't know, a couple of months ago.
Okay.
I really, really like, and normally when something comes out on an IPO, I didn't buy it on the IPO, but we looked to actually buy it after that. But I really, really, I think this is a fantastic growth stock out there. And it's not a household name, but what the company does is that it's involved in infrastructure monitoring of particularly within cloud environments. And so it's not a sexy stock like a Slack or an Uber,
right.
But it's in very, very strong demand. And it doesn't have a lot of competition. Probably the nearest competition would be maybe a business unit of Cisco and another company called New Relic. But they do have an edge in there. Fantastic growth. Revenues have been growing at 80% year over year. And I just think that it's a fantastic opportunity. We have a price target on this of $65 1 year out. Now, what's happening right here, if you see it on the chart, is that because of the IPO, you're going into the expiration of some of the lockups that are going on. And so right now it's trading, look at that, $35.91. So if it closes today over $36, this will facilitate another 20% on top of the 180-day that's coming up, another 20%. So even though it reported very strong about a week ago, everyone's sort of worried about this 180-day lockup, and maybe if it trades over $36, you're going to get another 20% that's going to come to the market. So, but this is a great opportunity to actually get into it.
Okay, let's see what you think about this next stock, Kim. Thank you. Back to the phones. We'll go to John in Montreal. Hi, John.
Hi, good afternoon to both of you.
Good afternoon.
My question's on Art Media. I believe they're in the arena of artificial intelligence and have a very exciting project that's coming online in 2020. Would you take a position in this company, sir? And may I have the latest information from you? And Anita, please, consensus, if there's any. Thank you very much to both of you. Have a great afternoon.
Thanks, John. Wishing you a great afternoon, too. Unfortunately, no consensus to provide you with. Sorry about that. Take it away, Kim.
Thanks for the call, John. I said I wanted to talk about this only because I've met them. I've met them a couple of times.
Right.
And it's a very, very cool, innovative, cutting-edge technology that they have. So in sort of layman terms, what they actually do is that they produce holograms of people, and then they can send it to various locations. And they can do it for people, but they can also do it for groups of people. I know, and I'm trying to remember, oh my gosh, the name of the CEO, but I met them a couple of times. I think it's trading, right around 10 cents, and it's sort of hung around this level. So I won't talk too much about the financial side because we've actually done some work for...
Larry O'Reilly?
No. Oh, Larry O'Reilly, yeah exactly. So we've done some work for our client that was actually sort of looking at this. So I won't sort of talk about the financial side. I'll talk more about the technology side of it. And you can see that it's actually come down. There's been a lot of dilution of the stock as they've tried to keep, they keep issuing stock and raising money to keep it alive. But someday, someone will actually pick this up. And it's probably sooner than later.
Okay. Let's get to a behemoth of a stock now. It would be Amazon. Ken would like your one-year outlook for this company. And just looking at the headline, there's so many headlines for Amazon, but it says millions watched its first UK soccer matches. Wonder if they're more interested in that than Brexit. I think the answer to that is yes. What do you think of Amazon?
This is one of our, I don't know, number 2 or number 3 stock in the portfolio. It's been disappointing, actually, for the last 4, 5, 6 months.
Right.
It's just sort of been treading water.
Correct.
And it's had a lot of headlines out there. However, Julie asked sort of what we think about it 12 months out. We still have a price target on it of 2,300 US, sitting right now just 1,750. You know, Amazon, as a portfolio manager and as our analysts look at Amazon, it's very difficult to figure out what their total addressable market is, whether it's in cloud or whether it's in retail or any of the other bets that it has. It just continues to disrupt the other industries, but it has some similarities to Google when you think about it, because the cash cow is coming out of the AWS, the cloud business, and so they use that money to actually disrupt the other industries, very much like Google uses for its search and its portal to actually disrupt other industries that they can get into. So there's a lot of similarities, and that's why, you know, our number 2 and our number 3 pick in our portfolio are Google and also Amazon. So this is one of those stocks that you just sit on and wait.
Okay, sit on and wait. Let's see if you feel the same way about this next stock. Julie in Vancouver has this one. Hi, Julie.
Oh, hi. Good afternoon.
Good afternoon.
And thank you for taking my call.
Always.
I just want to ask about Cisco.
Thanks, Julie. I was just looking, just to remind you, Julie, I'm actually going to be in Vancouver on December 19th, and we're just doing a road show out there. We're going to be in Calgary on the 18th and Vancouver on the 19th. So we'll be down at the Vancouver Club, Julie, if you want to come by.
So Forbes says Cisco's oversold. What do you think?
This is a core position. We have this investment committee. We have a couple of retired Cisco people on our investment committee, advisory committee, and I was just spent some time with them again yesterday. They are. It's sort of comparable to Microsoft, because Cisco is in that transitionary stage, moving from a hardware to a software services company. Remember that, and that's what Satya did over at Microsoft. Yeah. But they're in the right spaces because, yes, they still have the legacy of the network equipment and so on, but they are a core supplier when you look at the autonomous driving and into the themes of the 5G deployment. So they're in the right places and they're doing the right things on the management side of transitioning over into the software services. And so this is in our top 10. Our currently trading just under $44, and we have a 12-month price target of 56.
Okay, Kim, thank you for that. Let's take a break and come back with Kim Bolton's past picks. They look absolutely wonderful. Stay tuned for that. Welcome back to Market Call on BNN Bloomberg. We are with Kim Bolton. Microsoft, nice play here, Kim. Up 45% to close out this year. Not bad at all. This was the one, when we saw the tech stock sell-off last December, Microsoft really held on to its own. I mean, it sold off, but not as much as the other ones.
Well, they've just done, you know, they've been the poster child for the tech arena. Yeah. Particularly on the software side, and like if you look at our portfolio and those other tech managers that have done well, you know, the place to be over the last 4 or 5 years has been in software, and it's the hardware that's sort of been dragging it along. And on top of it, if you got into the arms dealers on the semiconductors, but Microsoft has done a fantastic job on the management side.
Suck the Anadel out the head there.
Yeah, but it's priced to perfection at this point. You know, we actually have a price target on this of here it is, $151.30, and we have a 12-month target of 152.
Oh wow! Yeah. All right, so a bit late to get into this party, perhaps for now.
Yeah, but you know the way
long term. Is that something you want to have in your portfolio?
Yeah. And so for us, I always say that, we use that equity indice overlay, the short overlay, that actually gives us the courage to stick with stocks like this on the Microsoft side.
What about Xilinx? This one rather flat, up just 3%.
Yeah. So Xilinx.
Still holding on to this now?
Absolutely.
You are?
Yeah.
Okay.
We don't have that many left. In the semiconductor space, we have Xilinx, we have Infineon, which is the German-Dutch one, and then we actually own the SOX, which gives you a scattering of a great many. So Xilinx, just to remind everyone, they're the leader in the field programmable array integrated circuits that allow customers and designers to actually configure those chips, but they're perfect. Again, going back to the themes, they're perfectly designed for the 5G deployment. They're perfectly designed for data centers, and particularly on the hybrid and the hyperscale side of things. So we have, but like Microsoft, it's priced to perfection. We have a 120. So we've taken a bit off the table here, but we have a 122 price target. I think it's sitting at about 100. What is it right now?
151. Oh, sorry, I'm looking at Microsoft.
Yeah.
I'll get that in a second.
Yeah.
Oh no, it's about $92.
Yeah.
Let's get to Yaskawa Electric.
Yeah.
This one, a nice 41% from January 22nd.
And you had to be patient with this one. There were two stocks that we got into. And they're Japanese stocks. They're involved in the robotics, particularly Yaskawa Yaski is very strong in the motor and drive technologies. But it's very cyclical when you look at their business, and you can see it. They're a leader when it comes to the Nikkei, and they've really sort of got on the back of the whole regeneration of the Japanese stock market. And they're just a darling over there on the robotics side. We have a price target on this of $95.
Okay.
And it's actually not that expensive because it's got a PEG ratio of 0.95. So it's still not that expensive.
Okay. Kim, well done, sir.
Thank you.
Let's take a break. Come back with Kim Bolton, President and Portfolio Manager at Black Swan Dexteritas. We're on Tech Today. Our number, toll free, 1-855-326-6266. Welcome back to the phones. Carlo in Mississauga, Ontario. Hello.
Hi, thank you for taking my call.
You bet.
I'd like to get an opinion on Sierra Wireless.
Right.
Taken about a 25% hit just in the last month. Wondering if I should be looking at it to add to this position or get out.
Yeah, good question. Thank you, Carlo.
Thanks, Carlo. We don't own it. We follow it. But what's today? December 6th. So they reported last night, and the shares went down another 13.5% after hours, and they missed on the top, they missed on the bottom, and then
price targets galore.
And then they pulled down the full year guidance, but on the other side of it, they talked about very strong progress on transitioning the whole company into an Internet of Things solutions company, and they noted about record quarter recurring services and growing services pipeline. So, but it's just not panning off on the financial statements, and it's very, very difficult to figure out. So I believe that 1188 that you have up, that's on the TSX, and so it went under that sort of technical point of $12. So there's still going to be some pressure on it. maybe an opportunity if you can get one final blow off, but you know, they are a good company, but it just hasn't panned off on the financials.
On the U.S. side, it's about just under $9.
Yeah. Yeah, and it's, you know, that $9 threshold, it was like the $12 for the Canadian,
right.
and it was a big, big technical point.
Yeah.
So I think you're still going to see some pressure come on it.
Okay, Kim, thank you.
Yeah.
Let's get to Peter now in Vancouver. Once again, Kim says he will be in Vancouver. Peter, what date?
The 19th at the Vancouver Club.
Okay, there you go. Good day, Peter.
Thanks, Anita.
You bet. Peter, are you there?
Good day.
Hi.
I see the great show. I see the lovely and great Anita.
Thank you, sir.
And then, of course, the Mr. Great Kim Bolton. Congratulations for your past pick. Good past pick. And also, I want to say that on October the 1st, you pick shop as your top pick at 414. Now it's 489. You recommend AMD to me at 28. Now it's 39. In my eyes, you are a hero, my hero, and you may be a genius.
He's your Santa Claus, Peter.
So maybe if you are free, I talk to you later. Maybe I buy you Chinese lunch when you're in Vancouver. If you are
Peter, you're so lovely. Thanks for calling in, Peter.
You're on, Peter.
Yeah. Mr. Kim Bolton, the great, may I, since you always pick U.S. stock, please, can you give me a good Canadian stock to buy so I can make some money? Thank you very much.
A patriotic play for Peter. A little bit of alliteration there. What do you think? Give us a Canadian pick. A bonus pick.
Well, first of all, thank you, Peter. Everyone's going to think that we've been talking because...
That you paid him to say this?
I'm actually going to talk again on my talk picks about AMD because I still believe that it has some more room to go higher. And if it ever comes down into the 30s, you should add to it. So it's interesting. I did a presentation yesterday and I had that same question about, you know, Kim, you have a lot of foreign stocks. What about the Canadian side? Right. And, you know, we do. You know, we don't have it now, but we've traded in on CGI, fantastic stock. OpenText, fantastic. So it has, you know, OpenText into that procurement side of IT services is very much, it's a leader. Gartner Research puts it up. But what I'd recommend, Peter, is Shopify.
Okay.
Shopify, now it's rebounded considerably from sort of down in the low 300s up to the mid 300s, but we still see that as having a good long runway going ahead of it. All
right. If you can classify it as a buying opportunity, has been selling off since August, since the summer months. So there you go.
That was the TSX. Yeah. If you look at the NASDAQ side of it, you know, those numbers that I was citing got down
right.
to
You had the U.S. numbers, right?
Yeah.
Okay. Thank you for that, Kim.
Okay.
Let's get back to the phones. Erwin in North Vancouver. Hello.
Hi, Anita.
Hey.
Great show.
Thank you, sir.
I would like your guest's opinion on a cybersecurity company called Fortinet. It was at about $76 in October, and it's now almost at $105.
All right, let's find out, Erwin, what Kim thinks about this company.
Thanks, Erwin. I really like Fortinet. We actually own a little bit of Fortinet still in that in the hack.
Okay.
Which is the ETF. But we actually traded the Fortinet for CyberArk. And they both done extremely well. Fortinet, fantastic technology on the preventative cybersecurity side of things, but then they've been very strong and aggressive on the sales and marketing side, which is very much panned off for them very well. So Fortinet, CyberArk, we picked CyberArk.
Okay. One more call before we head to break. Nicole in Montreal. Hi, Nicole.
Well, happy Friday to the both of you.
Happy Friday.
Yes, indeed. I'd like to ask Mr. Bolton his opinion on that 800-pound gorilla Intel, or if it still is that 800-pound gorilla. Have a great weekend.
All right. Thanks to you too, Nicole. Stay safe.
Thanks, Nicole. We don't own Intel.
Should have asked her how it is in Montreal.
Yeah.
All the snow we have in Toronto, my goodness.
So we don't own it. There are a few headwinds, and it's actually why, as I said to Peter, that we sort of like AMD versus Intel. Mind you, like Intel, you know, as my colleagues from Cisco will tell me, you know, you never discredit Intel because they always have a way of actually coming back and coming around. However, they do have a supply issue when it comes to their 10 nanometer chips that they have out there, because the likes of AMD and NVIDIA have come out with a better version of these 7 nanometer chips that have come out that are faster, and they're more efficient, and they're cheaper. And so Intel needs to sort of wear off that sort of supply side of it, and that's why it's sort of been dragging a little bit. But it's been that way for about the last 6 months, and they figure that supply situation or headwind should sort of wear off within the next quarter.
Okay, thank you for that.
It'll give you an opportunity to get it.
Brilliant. All right, Kim, let's take another break here on Market Call. You're watching BNN Bloomberg. Another round of calls and then top picks. Welcome back. We're with Kim Bolton. Let's get back to the phones. Kim, Habib in Toronto has a question. Hi, Habib.
Oh, hi. Thank you for taking my call.
You bet.
And my question is about Adobe. Is it a buy, or where do you see in 5 years' time? Thank you.
Thank you, Habib.
Thanks, Habib. 5 years' time. Holy smokes, that's a lifetime, Habib.
That's a commitment, Kim.
Yes, we own it. You know, the trading right now, and it is, you know, it's at the top of the range. We have a price target of 322. Here it is, just over 305. It's just, again, one of those companies that tremendous management. It continues to meet and beat expectations, and raise the guidance, and that's why it continues to truck along. But it is priced to perfection. Now, 5 years out, you know, Adobe originally was the poster child for CAD, for computer-aided design and so on. But it's just sort of expanded beyond that into many, many other services, and it's actually acquired a great number of leadership companies and other sort of affiliated businesses. So that's what gives its long runway. So Habib, like it, and I'd hold it.
All right. Thank you for that, Kim. One more call to go. Let's head back to BC, Richmond, and Jim. Hi, Jim.
Taking my call, Anita.
You bet.
I wanted to ask Kim about cybersecurity as well.
Okay.
I've been looking at it, and I'm not sure who the winners are going to be over the next 5 years. But my question is, I've looked at hack and I've looked at cyber, two ETFs, and I just wondered if Kim has a preference.
Let's find out. Thanks, Jim.
Thanks, Jim. Do I have a preference? You know, the cyber is actually a Canadian offered ETF, and then the hack is down in the States. We've owned both. Right now, I own the hack because it actually matches what we're doing on the single stocks. So on the single stocks in the cybersecurity space, we've got about a 4.5% position in CyberArk, very much like CyberArk's software. We'd like the cybersecurity space, and so that's why we own the hack, because it gives us the diversification, but it also gives us the opportunity, the flexibility and the agility to actually trade in and sort of take some money off. I often find when you have a number of single stocks, and you know, we have 3 analysts, one here, one in Israel, another one down in Silicon Valley, and the 4 of us will get together and we'll have our price targets of entry and exit and so on. But with the hack, it actually allows you to do it a lot quicker rather than doing the single stock. So in that cybersecurity space, Yes, we have CyberArk, but Hack, the Hack, the second largest holding in the Hack is CyberArk, but the largest holding in Hack is Cisco. But then you've got all the other likes and theirs of going through Fortinet, even into Splunk. So it is a good play. And whether it's cyber or whether it's Hack, they're both equally great plays into that space.
Okay, let's round this out. Give us a minute, if you can, on Constellation Software. This is an email from David. What do you think of this company for a medium-term hold?
Yeah. Well, it's a perfect medium-term hold. We only have just over a 2% position in Constellation Software.
Right.
How do I, the Constellation's business strategy, as a lot of your audience would know, but for those that don't, what they do is they acquire software startups and then they hold them for the long term. If you look at it, since their founding, which goes back almost 10 years, they've actually acquired over 260 startups. But it's not sort of a mishmash. They focus on vertical market software companies. And so there is a rhyme and a reason to it. You look at the company, their 10-year average return on investment on invested capital is 32%. So they're doing all the right things. Yeah. So I like the way you phrased it as a medium-term hold. We have a price target on this of a 12-month price target of $1,425.
Okay, well done, sir. Great chatting tech with you. The show's
Thanks,
not
Anita.
over, you bet. It's not over as yet, though. We'll take a break and come back with Kim Bolton's top picks straight ahead. Welcome back. We're with Kim Bolton. You talked about this company, Kim, throughout the show today. You can continue to make the case now for AMD.
And as Peter talked about before,
right.
I've mentioned AMD, but again, it's not cheap. It's trading right now just under $40. We got a price target, a 12-month price target of $45, but here again, this is where I'd sort of do it a third. I'd buy a third. And you're going to have some volatility over the next number of months anyway.
All the more reason to take up that play, right?
So get it on your radar at this point. Buy it in the low 30s, and then if it goes down into the sort of the mid to upper 20s, I'd buy it there. So AMD, they develop computer processors and related technologies for both business and consumer. But why do I like it? 3 things. So they have an aggressive product strategy. They have the 7 nanometer, which is really killing it when it comes to the GPUs and the CPUs. And then, as I mentioned before, there's that issue about the supply chain for Intel. And then finally, institutions have been buying this. They've actually gobbled up, since the summer, about 10% of the float. And these guys don't do it as a trade. It's an investment. Okay. So that's why I like it.
All right. What about Digital Realty, DLR on NYSE?
Yeah. So we sort of go back and forth between DLR, Digital Realty, and Equinix. So they're data centers. And so they really play to sort of the small, the mid guys. They do have some of the big fellows out there of Azure and Amazon, various locations around the world. But DLR is a REIT. And it provides co-location and peering services. So year to date, it's up about 17–18%, but it's had a bit of a pullback. So I actually sort of like it at this side. So that's why we actually traded out of the Equinix and got it into the DLR. But on top of that, they recently bought a Dutch information technology services company called Interaxion. Which we believe is going to be very accretive. And then finally on top of it, it's got a 3% dividend yield. And it's growing, it's got a CAGR of 11%, so that's why we like it.
Okay, let's round this out, Kim, with Yandex, back on the NASDAQ.
Yeah, so this isn't, a stretchy nylon type company or anything.
This isn't a play on spandex.
No. Think of Yandex.
That's funny, Kim.
think of Yandex as sort of the Russian alphabet.
Okay.
So it's a massive company, and one of my partners in this is a fellow that ran VKontakte, which was sort of the Facebook of Eastern Europe and Russia, Lev Leviev, and we talk a lot about this, and so recently we sort of bought into this Yandex. So it's got 5 business lines. It's got, it's got the search portal, just sort of like Google and Alphabet.
Mm-hmm.
It has a taxi service. They believe that it's actually going to go IPO. It's sort of an Uber, and they'll do an IPO in 2020. They're into the e-commerce side, the classified, the media, and then they have all the other bets. It's a real company. It's a real Russian company. In last year, they had 42 billion in revenue, 660 million, but you had that political risk of Putin.
Okay.
But we got a price target of $59.
All right, taking it right to the end.
Okay.
Kim, good to see you, sir. Folks, the markets are higher today, likely on the U.S. jobs data. Keep it locked right here for all your business news on BNN Bloomberg. I'll see you tonight, 6 o'clock Eastern.